Good morning. Welcome to
Morning.
the November 5th, 2020 investment meeting of the Teachers Retirement Board. I'll start by calling the roll. John Adler,
Here.
Thomas Brown,
I'm here.
Natalie Green Giles,
Here.
David Kazansky,
Present.
Russell Buckley,
Here.
Deborah Penny,
Present.
Susanna Vickers. We have a quorum, and I'll turn it over to the chair. Deborah Penny.
Okay, good morning. We're going to start with the Passport Funds Performance Review for September 2020. Emma or Robin, who's going to start us off?
Emma. That would be me.
Okay.
Good morning, everyone. Hope you're doing well. So we're going to start with a review of the September performance, and then we're going to preview what happened in markets in October. So just real quick on markets and what we saw in September. We did see a sell-off within equity markets, still finishing the third quarter in positive territory, which was driven by the strong performance we saw in July and August. So the S&P 500 was down 3.8% in September, still up 5.5% year to date. International developed markets down 2.6% in September and down about 7% year to date. And emerging markets down 1.6% in September and down about 1.1% year to date. Over the last several months, we've highlighted two major themes that have been happening in the market, perhaps to the point of sounding like a broken record. And both of these we saw start to reverse in September, and that continued in October. So the first was the outperformance of growth over value, which had been led by a few large tech stocks. And then the second was the continued outperformance of large cap stocks over small cap stocks, again, driven by those few large cap tech stocks. As noted, we saw this start to reverse in September. That continued through October. So the Russell 1000 growth was down 4.7% in October versus negative 2.5% for value stocks. Growth still outperforming by about 35% year to date, but starting to slowly see that dispersion close in. The large cap stocks were down about 3.7% year to date for September versus 3.3% for small cap stocks. Large caps still outperforming by about 15% year to date. Within fixed income markets, we saw spreads tighten across most asset classes, which led to some substantial rebounds in non-investment grade asset classes during the third quarter. So core fixed income markets were flat in September, up about just shy of 7% year to date. High yield emerging market debt, both were up about mid-single digits in the third quarter, and continued strong performance from convertibles, as these were up about 14% in the third quarter and up about 22% year to date. So if we think about how that translates to performance for the Passport Fund, so if you have the September performance report up, starting with the Diversified Equity Fund, about $15.7 billion in assets as of the end of September. The fund was down 3.06% for September versus a return of negative 3.6% for the Russell 3000. If we look at the underlying components for that performance, the passive equity composite was in line with the benchmark. The defensive strategies was down 2.23%, outperforming the custom benchmark and the Russell 3000 for the period. The outperformance relative to the benchmark was driven by active management within your convertibles managers, as well as within your tactical global allocation managers. Moving on to the active US equity composite, this was down 3% in September versus 3.64 for the Russell 3000. That small cap value bias in the portfolio that we had talked about at the last meeting contributed to the performance relative to the Russell 3000. As I noted, both small cap and both value outperformed growth and large cap counterparts during the month, which led to the positive relative performance of about 65 basis points. And then lastly, the international equity composite down about 1.5 for the month, outperforming by about 70 basis points. And we continue to see strong relative performance from your international managers relative to the benchmark on the year-to-date period. Any questions on the diversified equity fund? No? Okay, great. Moving on to the balance fund, assets of about 510 million as of the end of September and in line with the benchmark. As noted, the International Equity Fund, strong relative performance as it's outperforming the benchmark by about 70 basis points in September and by about 300 basis points year to date. Assets in that fund totaled about 183 million as of the end of September. The Sustainable Equity Fund, 332 million as of September, down 1.7% in the month versus the benchmark return of negative 2.2%. There's one underlying fund within this fund, Brown Capital, and we had seen some performance challenges in July and August as the benchmark for this strategy is the Russell 1000 Growth, which has been pretty heavily concentrated within a few tech stocks. And as a result, the manager was underweight, which had caused them to lag as these stocks had rallied in July and August. We saw the strategy rebound in September as there was a sell-off within these particular stocks. And then finally, the US Equity Index Fund and the International Equity Index Fund, total assets of 28 million and 4 million as of the end of September, respectively. There were two large cash flows that occurred in late September in both of these funds, which has led to some tracking at the total fund level. But if we look at the individual index fund performance, they are tracking their benchmarks. Any questions on September performance? No? Okay, great. So if you pull up the other attachment that we had sent on Monday, the October benchmark report, just going to highlight what's happened in markets so far in October and some of the preliminary performance numbers that we included. October was an interesting month in that in the first half, we generally saw positive performance from equity markets. And then we saw a sharp sell-off in the second half of October as we saw rising COVID cases, hospitalization rates increased, and we saw a reinstatement of some national lockdowns within Europe. The last week of October in particular, the S&P 500 had its worst week since March, despite the fact that we saw strong earnings come in, and we also had some modest positive economic results. Notably, third quarter GDP had grown at an annualized rate of about 33%, which was above consensus expectations, and was actually the best quarterly rise since World War II. US equity markets, the S&P 500, down 2.7% in October, still up 2.8% year to date. We saw the continued sell-off of growth stocks in October. The Russell 1000 Growth was down 3.4% versus negative 1.3% for the Russell 1000 Value. Small cap continued to outperform large cap. Small cap stocks were up 2% for the period. Large cap stocks were down 2.4% for the period. International equity markets lagged US markets due to some of the more serious COVID concerns as we saw spiking cases overseas. France and the UK announced that they were going under strict lockdowns. And as a result, we saw international developed markets fall by about 4% in October. And these are down about 10.5% year to date. Emerging equities outperformed US markets and international developed markets, largely driven by Asia performance. Emerging markets were up about 2% in October, and they're positive 1.2% year to date. And then lastly, fixed income markets delivered relatively flat returns as we saw yields increase. So core fixed income down about 50 basis points for the month of October. Non-core investment grade markets provided modestly better performance as credit spreads tightened, which offset some of the increase in yields. If we look at how that translates to performance for the benchmarks within the portfolio, the diversified equity fund, the Russell 3000 was down 2.16 during the month of October, and the hybrid benchmark we've developed was down 2.18% for the period. The balance fund the benchmark fell by about 70 basis points. The international composite benchmark down about 2.5%. Notably, as I mentioned, continued strong performance from Brown due to the fact that they're underweight some of the large tech stocks. So down 60 basis points using the mutual fund as a proxy for the month of October versus the benchmark return of negative 3.4%. And then lastly, for the 2 index funds using the mutual fund as proxies, these were down 2.13% and 2.29%, tracking their benchmarks for the period. Any questions?
Okay, I guess not. Thank you so much, Emma. That was great. Do we have anything else for public agenda? I think that's it.
Could I mention one thing, Madam Chairman?
Absolutely.
So I wanted to follow up on the recent discussion we had about active U.S. equity. We had a discussion about performance of active U.S. equity in general and within variable A specifically. And there was a fair amount of data presented that showed the challenges that active U.S. equity had over the past decade, really. And we thought it might, before the board comes to a final decision, we thought it might be of interest to the board to hear some arguments in that might support active equity and the opportunity to add value going forward based on a variety of perhaps potentially changing characteristics of the U.S. equity market, including greater dispersion of stock returns, et cetera. So we would like to propose bringing in a speaker next month at the investment meeting to talk about active equity management within the U.S. equity market for the board's consideration prior to a final decision on this matter.
Yep, that would be great. Anyone?
Yeah, absolutely. That would be great.
Okay.
What is our
appreciate that.
time frame for decision making? Do we know?
I
Robin,
think
do we have it?
it's at the board's pleasure, of course, but I think this is really the final piece that we had prepared, we had expected to present to the board, and following that, I think it's a matter of discussion by the board and determination of how you'd like to proceed.
Good. So at least we'll hear from them next week and we'll kind of digest that. And then next month, I'm sorry. And yeah, sounds good. Sounds good.
Great.
Okay. So we're going to make a motion in a minute to go into executive session, and then where's Liz? Liz, we have everything we need to go once we take the vote, and people will just stay put. Okay. Do I hear a motion to move into executive session?
So moved.
Thank you, Mr. Brown. Do I have a second?
Second.
Thank you, Mr. Adler. All those in favor, please say aye.
Aye.
Great. Any opposed? Okay, we are moving into executive session. Okay, we are back in public session. Susan, would you like to report out?
Certainly. Oh, first I have to start my video. Certainly. In executive session, we received presentations from 2 vendors and 2 short manager updates.
Okay, thank you, Susan. Okay, then I think we're ready to adjourn. Do I have a motion to adjourn?
So moved.
Thank you, Mr. Kazansky. Do I have a second?
Second.
Thank you,
That was good,
Mr. Brown and Ms. Beckers. All those in favor of adjourning, please say aye.
Aye.
Thank you. Any opposed? Okay, we stand adjourned. Thank you, everyone.